Today, I'm super excited to pull back the curtain on something that I've been building for years, which is my entire investment portfolio, which is currently sitting about 1.1 to 1.2 million dollars in my 2026 long-term portfolio. The title says it all. In this video, I'm going to be revealing my entire investment portfolio with over $1 million. So if you're new here, I talk about investing, personal finance, and building wealth the smart way. So make sure you hit that subscribe button and hit that like button for me as well. I also do have a 100% free trading Discord where you can come trade with me. I'll either link it right here or in the top of the description. Love to see you guys inside. Before we dive in, a quick disclaimer. This is not financial advice. I'm just sharing my personal holdings and thoughts for educational and entertainment purposes only. Everyone's situation is different, so please do your own research or consult with a professional advisor before making any investment decisions. Past performance doesn't indicate future results, and investing does involve risk, including the potential loss of principal. All right, let's get into it. My portfolio is diversified across tech giants, ETFs for broad market exposure, financial services, consumer staples, and a few industrials. I focus on long-term growth with some dividends plays for stability in this portfolio, but the total value of this is about 1.1 to 1.2, including my Roth IRA. My Roth IRA does just include the ETFs QQQ and VOO. I currently hold about 22 positions in this $1 million portfolio. And in this video, I'll break them down for you one by one, sharing why I own them, their current performance, and my outlook. I'll include the number of shares I hold, the current price, and the position value based on all the latest market data in 2026. To make this video flow a little bit better, I'll group them into categories, which is going to be tech and growth stocks, ETFs, financials, consumer and retail, and industrials and others. So let's get started with the heavy hitters, which is tech. First up, the tech sector. This is where all the big chunk of my growth comes from in this portfolio. These companies are innovators in AI, cloud, and e-commerce, and much more. Starting with Amazon. I hold currently 634 shares of Amazon, which is sitting about $247 per share, and it has a total market value of about $157,000. Amazon is the e-commerce king, but Amazon Web Services is the real profit machine. Let's get started. The market cap sitting at about $2.5 trillion, and they only have a forward PE of about 32, and the revenue is topping $691 billion trailing 12 months. Over the past year, the stock is up at just about 2.8%. I know this says 11, but it's actually up about 2% over the last trailing 12 months. But long term, it's been an absolute beast. I mean, over 169% over the 3 years, and analysts currently have a price target of about $297 on this stock, which is rating it an outperform in 2026. Personally, I love Amazon for its dominance in cloud and retail. Despite having a rough 2025, I see this having a big rebound in 2026, as why I'm going to continue to be absolutely aggressively adding this stock for 2026. Coming in at number 2, we have Google. This stock has been on an absolute freaking tear. I have right now about 469 shares, and it is currently sitting about $329 a share. And the current market value is around $154,000. Alphabet is Google, which is Google Search, YouTube, Android, and now a big player in AI with their Gemini. Gemini has been the absolute crusher leader in all of the AI tests. Market cap on Google is currently sitting at about 3.8 trillion, and their forward PE is only 31, which is actually super undervalued for an AI and tech company. Their revenue is $385 billion, and the past year, this stock has returned about 67%, which is absolutely insane. It's pretty crazy. It's actually crushing it. Analysts still have a target of about $330 a share on this, and it's still an outperform rating. I personally could see it going to $350 before it cools down a little bit. I'm personally holding it for the ad revenue moat that they currently hold and the cloud growth. Cloud growth is phenomenal in this stock right here. And 2026 looks super strong for this with their AI advancements, as they are the clear leader. Coming in at number 3, a stock that's a little controversial. I know some people hate this stock, but some people like it. I currently hold about 515 shares of Tesla, and that's a whopping $229,000 in market value. Musk absolutely runs the EV empire, plus their energy and robotics company. I'm super excited for unsupervised FSD, which is supposed to be in Q2, and the Cybercab is supposed to be ramping up in Q2 of 2026 as well. So the current market cap on this is about 1.46 trillion, and the PE is super expensive on this at 302, but I think that's just not pricing in future growth yet. That's why it has such a high PE ratio. Personally, I'm holding it for the long haul, so I'm not really worried about if the stock goes up, down. Doesn't really matter where it goes. It's been all over the place. I'm just going to continue to be a dip buyer on this stock as it goes up and down. I'm holding it for the long term for autonomous driving and robotics. Coming in at number three is a stock that I've been holding for a really long time. I actually did trim a bunch of it this year, which is Nvidia. Nvidia, I only now have about 119 shares, unfortunately. I wish I had a little bit more. And it's currently sitting about $22,000 in market value. This is the AI chip leader, obviously. It does have a super impressive market cap value sitting at 4.6 trillion, which is the largest company in the entire world. But they do only have a PE of 47, which is honestly pretty good for this company as well. I expected this stock to grow over $200 a share in 2026. Their revenue was about $187 billion, which is up 36.6% since last year. A lot of analysts have a price target on this stock around $253 a share. I expect it to go to at least 220. And with AI demand keep on exploding, I expect this to keep on growing about 15 to 20% as well in earnings growth. And I'm going to continue to add this one right here. Coming in at number four is a stock that's been a little rocky as they really haven't participated too much in the AI, but it is Apple. I've been adding this since I was in high school, so this stock is just something that I have always added. It's one of the first stocks I've ever bought, and I have about 309 shares at the current value of $259, which marks about $80,000 in total market value and a 52% up. This company has an absolute crazy moat, on their iPhones, their services, their wearables like their Apple Watch, and they have a 36 PE ratio. So I do expect this stock to, get some momentum towards 280 in 2026. And it's expected to have an overweight with 288 by analysts. I expect about 280. So, and as they get AI ramped up in iPhones, I expect the stock to absolutely explode as well. And they are also supposed to have a new CEO relatively soon. Coming up next is a stock that I just recently started adding, actually. I was a little late to the bandwagon on this one, but I do like it going long term. I have about 37 shares of Microsoft, which is only about $18,000. They are currently sitting at a $3.5 trillion market cap, and also they only have a PE of about 34, just like many of the other companies such as Nvidia and Apple. Their revenue is absolutely astonishing. They have $294 billion in revenue, which is up 13.8%. And a lot of analysts have targets on this of over $623 per share, which is a huge outperform. I've only been adding this one a little bit recently, but I do like it long term as well. And I'll continue to add it. The next one is a stock that I'm a huge, huge believer in, as I used to run e-commerce companies on this platform. So I started buying it back in the day. And I haven't really been adding this one at all anymore. As you guys can see, my current average is only $66 per share, but I am holding it for the long term. And the current value is about $17,000 as well. And I'm up about 150% in this stock alone. So I haven't really been adding this one. They're a huge e-commerce platform. They have a market cap of about $205 billion. But why I have not been adding this stock is that they actually have a PE ratio of over $115. So I'm not really going to be adding this one too much. The stock is up an astounding freaking 58% in the past year as well. I do see a big 2026 as they did partner with, ChatGPT as being integrated. But this stock I'm personally staying away from and just selling covered calls on. Next up is a stock that is, in my opinion, super undervalued and super sold off recently, and I have been aggressively adding the stock as well. This stock right here, Meta and Amazon, have been my two largest buys. Meta currently, I have 39 shares only, sitting about $25,000 market cap. I do wish I had a lot more. They own Facebook, they own Instagram, a lot of VR reality companies. They have a $1.64 trillion market cap, and they are only trading at 29 forward earnings, which is so cheap for a tech company. They also run the ad service business better than anybody. Their dominance on ads is absolutely insane. This company right here, I do know that a lot of analysts do have a price target of $837, which is extremely overweight. So lots of upside in this stock. I'm a big buyer under 750-ish. I am excited for their AI. They continue to integrate AI and invest in AI. Also, they do have the smart glasses, and they have had a lot of major acquisitions recently. Now for the broad exposure and a lot of stability for me, which is ETFs. So coming in at number one is QQQ. This is the NASDAQ 100, which tracks the top 100 tech companies. It's been on an absolute tear as of recently. So I do own about 154 shares of this, which is a current market value of about $96,000. I add this one all the time, doesn't matter what price it is. Doesn't matter if it's going up or down. This stock is, or this ETF is something that I buy all the time. It does have a pretty cheap expense ratio, which is only 0.2%. And in the past year, it's up over 22%, which is insane considering the average is about 10%. I'm really excited for this one because as AI leads, growth is going to lead as well, and this ETF should absolutely explode as well. And I see continued strength with AI. So coming in at number two, even more broad than the Nasdaq, which is the S&P 500. This is the Vanguard VOO that tracks the S&P 500. This one right here, I have about 141 shares, and that is a current value of actually just broke 90,000. I didn't know that. Just broke 90,000. It's just current expense ratio is only 0.03, which is like pennies on the dollar. So this is actually cheaper than buying the S&P, and it tracks it as well. So you save a little bit of money on your expenses. And in the past year, it is up about 18%, which is over the average as well of 10%. I expect steady growth in 2026. So, and as Fed rates come down, I expect the S&P 500 to grow as well. So I will continue to add this no matter what the price is. Coming in at number three, the absolute last ETF that I do hold in my portfolio because it's not good to hold too many ETFs. And this one right here is just for the dividend. And I'm young, so I don't really pay too much to dividends or to anything that's not super growth related. But I do currently have over 1,100 shares of Charles Schwab, which is pretty impressive, but it is cheap. They do offer about a 4% dividend, which is phenomenal. And their expense ratio is only 0.06. So I love that as well. It doesn't move as fast, but it does absolutely help curve in down times. It doesn't really go down too much when the market is going down. So I do like this, solid for dividends, and it's a super defensive play. But like I said, I kind of stay away from this one as there's only $30,000 sitting in it. Coming up next is the financial sector for stability and growth. I'm pretty excited about this first name here, and it is Berkshire Hathaway. We did see Warren Buffett just step down as the CEO, so I'm excited to see what's going to happen with the stock next. I'm going to continue holding it. I do only hold like about 30 shares of it currently, which is about $16,000. I'm really excited because they've actually outperformed the S&P 500 over like so much over the long term, and I expect it to continue to happen. So I'm just going to continue buying the stock as ever since Warren Buffett did announce that he was retiring, the stock has absolutely just been coming down and not really moving too much. So I do love this one long term, and it's a no-brainer for diversification. So I'm going to continue to buy Berk. Next up is a healthcare stock that's been absolutely just been getting crushed. I am personally down on this stock a little bit right now. I became a buyer under $500 a share, and it just kept on dipping, and I'm going to continue to buy the dip. So this is UNH, which is United Health. I do own 31 shares, which is actually down pretty well right now. I do dollar cost average into this one every so often because I do expect it to have a big rebound. It is currently only trading at 18 times price to earnings, which is literally pennies on the dollar, and they have revenue of $435 billion. It's down 35% over the last year, so I do expect a big turnaround in 2026, and we did see Warren Buffett did just buy this stock. So I'm going to continue to buy that one and hold that one. Next up, we have my favorite banking company of them all, and that is Goldman. I'm a big believer in Goldman long term, so I obviously do buy the stock. I've been buying it for a long time as my average is $483. I do have 31 shares as well. As you guys will notice, most of these companies going forward will have around the same market value. So it's about $30,000. And they also do trade at a price to earnings of only 19. Past year, this stock has been absolutely exploding up over 63%. And that's where a lot of the returns came from here. I did alert that one, and a lot of people I know are making a lot on that. They have about $40 billion in revenue, and as rates come down by the Fed, I expect the risk on to be absolutely phenomenal. So I'm going to continue to buy this one, and they are really focused on digital payments as well. Next up is Visa. Visa is, I personally use this over MasterCard and everything. I personally use this and a lot of people that I know use Visa over MasterCard or American Express. So I love Visa here. I do own about 51 shares of Visa, and the market cap is about 34 price to earnings on this, and the market cap is sitting around 669 billion. This will be over $1 trillion in my personal opinion. They are up about 12% over the last year, which is pretty average with the S&P 500. But a lot of analysts do have price targets of $390. So I would not be surprised if we do see around that $400 close in 2026. So I will continue to buy Visa as well. And next up is the absolute king of just everything, and that is BlackRock. BlackRock is super expensive. So what I do here with companies that are super expensive, I personally do buy fractional shares. So I might just throw $100 or $50 or $250 in here and buy fractional shares on Robinhood. I do love this one right here. They do have a PE of about 28 price to earnings, which is pretty low as well. And their revenues are about $23 billion. So right here, you guys can see I'm up about 25%, and the market value is about 19,000. There's targets on BlackRock that are up to $1,300. I wouldn't be surprised if we see a strong 2026. This stock does exceed that and does see $1,400 per share. And they own pretty much all the ETFs, even in crypto, stocks, every single sector. They run the absolute everything. So good dollar cost average into BlackRock. Next up is the absolute company that I'm using right now and that I brokerage on, and that is Robinhood. I've been a big believer in Robinhood for the longest time ever. I remember when this stock was trading down here in the eights and nobody wanted it, and I was telling everybody this is a great time to be dollar cost averaging all this time. So you guys can see I'm up about 400% in this right here, and my 4,000 is worth about $18,000, and my average is only $22 a share. Which is pretty freaking crazy. The market cap is sitting about $104 billion as of current value right here. The stock recently was just about 150, so it did come down some. The PE is only 48. But what I'm most excited for is, analysts do have a price target of 150 on this stock. I could easily see it going there, but they are continuing to absolutely bring in new customers from other companies and just bring in new things like the betting, the prediction markets, and everything like that, crypto. So I'm a long-term bull on Robinhood as they are capturing all Gen Z and millennials. Next up is consumer and retail, which is consumer plays for everyday essentials that are not going to really matter whether we're in a recession or not. These companies are going to absolutely succeed anyway. So coming in at number one, my absolute favorite company of them all in the consumer retail is Home Depot. This stock has not really moved much as of recently, but people are going to continue to remodel their homes, build homes, regardless of what's going on, fix things in their home, plumbing, whatever it may be. So currently I do own about 40 shares of Home Depot, and the current market value is about $16,000. The market cap is $344 billion on Home Depot, and the only real competitor is Lowe's, but I do just believe that Home Depot has the moat there, so I do like Home Depot. The PE is currently sitting only at 24, which is super low as well, which I'm happy with. I do like that. It hasn't really moved much in the past year. It's kind of just been going 420 down and bouncing around. So I've just been buying it up in these dips in the 350s. I do have a personal target of about $397 on this stock right here. So I do like it, and I do buy it on any time it's dipping. The housing market is pretty crazy right now, so it could definitely throw a boost into this stock, especially if rates come down. People will be remodeling. So I do like this stock heading into 2026. Next up is a little bit of a biased play here. I personally just love Starbucks, so I've always just added it. I'm not really having a return on this one. I don't really have much money in here. I only have $9,000 current market value with about 100 shares. So nothing really crazy. I personally am not adding this stock at all. I'm probably going to exit this position around this cost average and just throw it into the S&P 500 just because there's just a lot of competition with the stock. I just was buying this back in high school because I didn't really know, and I kind of never really stopped. I just kind of just been throwing a couple dollars in it once in a while. But they do have a PE of about 52, which is a little high for me. And they really haven't, like, this is more of a hold stock for me right now. I'm not really buying or like selling it unless it gets closer to my average. Um, so I don't really recommend this one, but this is just in my portfolio. So I figured I'd show you guys. Not every stock is a winner in my portfolio, but the winners are winners and the losers are minimized. Next up is a company that this company is insane with their subscription business. The subscription business is absolutely phenomenal. I mean, the retention rate is over 90%. People are just renewing their memberships. So Costco is currently sitting about $900 right now, which is a total market value of about $16,000. I don't own many shares, only 18. It is worth a lot right here. You can do fractional shares. I just don't really do too much of that of this. Um, they're a big warehouse for retail, and the market cap's about $379 billion, and the PE is about 46. But they do have a lot of outperform ratings from analysts to be in about $1,031 a share. So I do absolutely love this stock, and I would dollar cost average into it personally, especially if it's under like 950. I do like it a lot personally, and I will be adding it in my portfolio. Next up, we have industrials. Industrials, they've been going absolutely crazy lately, especially this one stock right here. And I've been calling this stock out for a long time. A lot of people were wondering, how is Caterpillar AI related? I kept saying that in all my videos. Caterpillar AI, this stock is going to go crazy. And it has had a really crazy run, 22% in just the last 3 months. The last year, this stock's up 72%. Nobody knew why I was telling them that, but I was saying it and it did exactly what I said. Um, so currently I own about 43 shares at about $600, which is $26,000 in market value, which is up a whopping 82%, which is mainly came this year because I did tell everybody that I was buying it in this past year. They are the absolute leader in construction equipment. They have a market cap of about 280 billion and a forward PE of about 31, and their revenue is 65 billion, which is absolutely insane. I mean, that's really, really good. This stock is going to be AI. I mean, they're going to have all their construction equipment AI related. So no one's going to have to run these vehicles. It'll just be doing them. So like the farming and stuff, it'll just do it for the crops, etc. You won't need to be paying somebody to be doing it. Next up is one man's trash is another man's treasure. And unfortunately, no matter what is going on in the world, there's always trash, and everybody always has trash. So this stock has always been a buy for me, and that is Waste Management. You could see right here, I do own about 72 shares of Waste Management at $200. It is about a market cap of $16,000. I mean, waste services are just never going to go anywhere. Everybody has their garbage, so not really worried about this. And they do continue to just have their revenue absolutely explode. Their revenue is $25 billion. And my personal target and analysts have about a $250 target. I personally do like around 260 on this one. It's an essential service, so not really worried about it. And they do pay a nice dividend. So I expect them to continue to increase that. And just this is a buy and hold for every type of stock for me. So with Waste Management in conclusion, there you have it, guys. There's my full $1 million portfolio revealed. My overall strategy here is about 60% growth in tech and 20% for ETFs and balance. I am young, so I am very tech heavy. I do have about 20% in value and defense stocks. My total dividend yield is about 1% to 2%, but that's not my focus. My dividends are not my focus. Otherwise, I would be more into like SCHD. But although I wanted to grow my capital, so that's why I'm very tech heavy. My portfolio does have a little bit of risks in it, including market volatility as like tech goes up and down very, very much, but I'll continue to buy any of those dips. So like I said, I'm not really worried about this portfolio for the long term. So tell me in the comments what your favorite stocks to hold in your portfolio are and why you're holding them, and I'll check them out as well. So if you guys enjoyed, like, comment, and subscribe, and I'll see you guys next time.